I'm going to take a look at gold today. Um, a couple of things I've mentioned in past videos. Most ICLs will close below the 100-day moving average. You can see we did that here, and then we got that fake out rally. It made a higher high. Uh, that um, drew us in a little prematurely, and we ended up getting stopped out once gold dropped back below the 100-day moving average. So we're still back on the sidelines. We've got a third test of the 1850-ish level here today. And triple bottoms are pretty rare. Usually if I see something testing an area of support multiple times, it usually means eventually it's going to break through there. So that's what I'm assuming at this point. I'm pretty sure that this is a new daily cycle. It has left translated in that and failed in that with that big attack back on Monday, I think it was. Price dropped below the previous daily cycle low, so this entire daily cycle is left translating. We got a bounce after this big move. It was not able to recover the 100-day moving average or the 50-day moving average for that matter. And now again today we're retesting this zone. I'm assuming at this point that this daily cycle is going to run a normal duration. That means I think we're on day 20 today. That means probably we got another at least couple weeks to go, maybe 3. So I'm assuming a bottom sometime in December, probably mid-December, and I'm assuming that this triple bottom is probably gonna break before we can get our final low. Normally, I would expect that a breakdown below this support zone might trigger that bloodbath phase. That's the 5 to 7 days of all-out panic. Although I'm not so sure that's going to happen this time because this is just not really unfolding as the type of correction that would terminate with a bloodbath phase. This is one of these long sideways whipsawing type corrections, and generally those don't give us a bloodbath phase. So when we, again, I'm assuming that this triple bottom is going to break at some point here. So when that happens, I'm kind of just assuming we're probably going to drop down to this $1,800 support zone, which is kind of right in here around the 200-day moving average, and that'll probably be our final intermediate cycle low. This is already turning out to be an extremely stretched intermediate cycle. This is would be the 6th daily cycle embedded within this longer term intermediate cycle. So I just find it hard to believe there could be a 7th daily cycle after this one as well. So I'm going to assume that at some point we're going to break this triple bottom, probably come down to test this 1800 support, maybe the 200-day moving average. But I'm not terribly confident that we're going to get one of those scary 5 to 7 day bloodbath phases when this breaks. I think it's likely to break, get a bounce, roll over again, and we may have 2 or 3 more weeks of just this churning, frustrating, whipsawing type behavior before we get our final bottom. And then when we do get our final bottom, we're probably not going to just rocket launch out of that bottom. That's also not how these frustrating type corrections, when they start the advancing phase, they don't just usually start with a rocket launch straight up. They will continue to churn for a few more weeks or even a month, and you may even get some kind of a retest of the bottom. So it would not be out of the question at all to eventually break down here, test 1800, get a bottom, bounce, and then get some kind of retest of that bottom before we really start to take off in earnest. But I think once we do take off in earnest by May or June, we're probably going to see gold maybe as high as 2,500. I think silver has a good chance of testing $50, and I think the miners, GDX in particular, has a decent shot of retesting the all-time highs at about, I think it was at about $67 before this intermediate cycle is over. But I think we still got some frustrating times ahead, and probably a breakdown below this 1850 before we get our final bottom.